Hey everyone. As I talk to investors across the country, the biggest challenge people voice centers on uncertainty. There are a lot of forces in play and a lot of scary headlines that cause people to hit pause. To help you get a handle on the economy and the commercial real estate market, I want to personally invite you to an industry-leading webcast that Marcus Millichap will host on February 6th. Our CEO, Hassam Naji, will lead a conversation with Moody's lead economist, Mark Zandi. They'll be joined by Wendy Mann, the CEO of Crew, Tom McGee, the CEO of ICSC, and Mark Salvatelli, the CEO of NAOP. You'll find additional information and a link to the registration on our website. I also want to highlight the release of the Marcus Millichap 2023 investment forecast reports. Our Canada forecast was released last week, and our US multifamily report covering 50 different markets comes out today on January 30th. The office forecast will be available on February 1st. Then we'll follow up with the retail, self-storage, hospitality, and industrial reports in the following weeks. With regard to the forces raising uncertainty, there are really three factors in play. First is the economy, inflation and recession risk. It does appear that inflation is easing. The headline rate has come down from a peak of 9% last June to the December reading of 6.4%. Then there's the Fed response, the rate increases. They hit it hard last year, but it looks like they may be easing up. We'll know more when they make their next rate decision on February 1st, but right now Wall Street is baking in a greater than 95% probability that the rate increase will be just 25 basis points. Now, I want to focus on the third issue, the one drawing the most media attention right now, the recent big layoff announcements. Google recently announced the layoff of 12,000 employees. Microsoft is letting 10,000 people go, while Salesforce and Amazon are each downsizing by 8,000 team members. And it's not just tech. Over the last few months, we've seen major layoffs in the banking and finance industry and the real estate sector. But let me drill into this a minute. In the month of December, the US added 223,000 new jobs, and the unemployment rate was 3.5%, a 50-year low. Even in the Bay Area, the epicenter of the tech industry, the December unemployment rate was incredibly low, just 2.1% in San Francisco and 2.3% in San Jose. To put that in perspective, the 5-year average unemployment rate prior to the pandemic was 2.8% in San Francisco, and it was 3.7% in San Jose. So even if the unemployment rate in the Bay Area rises, it's still going to be lower than the historical norm. For the rest of the country, remember, we still have 10.5 million job openings, way above the historical average of 3 to 5 million openings. We have a significant labor shortage that's making it hard to fill all the jobs. So once again, I know the headlines can be scary, but when you dig into the data, the economy is actually pretty solid. Now, as for the commercial real estate implications, if we manage to dodge the recession bullet, or if the recession is really mild, then the commercial real estate outlook does get brighter. Improving consumer sentiment should bolster apartment demand and stabilize vacancy levels despite the record number of new units coming to market. Industrial's in the same boat. Lots of development, but if the economy gets past a slump, that space could fill up. Retail could get a boost from a strengthening economy. Vacancy rates are already back in alignment with pre-recession levels, but space demand could get even stronger. Yes, there have been some high-profile retailer bankruptcy announcements recently, but it's kind of like the jobs numbers. The big high-profile announcements are just a fraction of the story. Finally, there's the office outlook. That one's a bit of a wild card because it's less about the economy and more about changing behavior and working from home. That said, I do anticipate some gains in suburban and small city office space demand, while the demand for the urban core of major metros may still be very soft. My key point here is don't get lost in the headlines. The underlying data tends to look better than the sensational big news. We'll get into more of the details and some top-tier expert opinions next week when you hopefully join us on our upcoming webcast featuring Mark Zandi and some of the top commercial real estate industry leaders. They'll help you keep your eyes on the horizon.